Now, this was a much better number to see on Wall Street at the close of business today. The markets, as you can see, plunged as soon as trading began this morning with the news of the invasion. But all eyes are on the futures as it's looking like the Dow Jones will open in the red again in the morning as investors keep an eye on the conflict. So how's the conflict going to affect your wallet? One local finance expert says, unfortunately, it could very well amplify the inflation we're already seeing. So on your sides, Haley Harrison explains why.
Russia is a massive commodity producer worldwide. Europe especially relies on the country for oil and natural gas.
But there are other commodities between Russia and Ukraine. For example, wheat is 30% of worldwide production is in Russia and Ukraine. And then there are other commodities such as aluminium, which Russia produces, is 10%.
The good news is, Jacksonville University finance professor Abdel Misa says the United States doesn't depend on Russia. However, since this is connected to global trading, the stock markets, it works its way back here. Misa says everything is lined up for high inflation.
We have inflation that's due to the stimulus that we have had, right, both monetarily and fiscally. We had inflation as well due to the supply chain, and the labor market is tight, right? And then now you add to it that we have a supply issue with commodities or potential geopolitical risk. So then this is becoming a major issue for the U.S. economy.
This may lead consumers like you to decide to stop paying for certain products, he explains, which could cause an even bigger problem: high inflation and slow economic growth, also known as stagflation. I'm Haley Harrison, First Coast News, on your side.
Thank you, Harry.